Hey everyone, and welcome back to the Deep Dive. Today we'll be diving into something pretty fascinating. We're heading over to Nigeria.
Oh, interesting.
Yeah, during the peak of the COVID-19 pandemic. We're going to take a look at how their banking system handled, all the craziness of managing liquidity during a global crisis.
A major stress test for any economy, that's for sure.
Absolutely, and we've got a great source to help us break it all down, an insightful video from Time Out with Yomi Martins.
Okay, I'm familiar with that series. They always have really thought-provoking discussions. So what are some of the key takeaways we're looking at today? What's the mission of this deep dive, you could say?
You got it. We're going to learn how Nigeria, a major player in the African economy, navigated those really choppy waters of liquidity management. Think resilience, adaptability, the kind of stuff that can offer some valuable insights for anyone, whether you're into finance, economics, or just fascinated by how systems handle extreme pressure.
I think that's something we can all relate to, especially these days. Everything feels a bit, unpredictable. And seeing how a nation like Nigeria tackled these issues head on can definitely provide some valuable lessons on navigating uncertainty.
You hit the nail on the head there. And to really grasp the magnitude of what they faced, the source paints this really vivid picture of Nigeria in 2020. Lockdowns, travel restrictions bringing everything to a standstill, supply chains completely disrupted. The global economy was sent into a tailspin, and Nigeria really felt it acutely.
It was a challenging time for everyone, for sure. And Nigeria, like many other countries, had to grapple with the economic fallout. The source actually cites a statistic from Nigeria's National Bureau of Statistics, and it's a bit sobering. Their economy contracted by 6.1% in the second quarter of 2020 alone.
6.1%, wow.
Yeah, one of their worst quarterly declines in decades.
That's a massive hit. I can only imagine the ripple effects that must have had on businesses, individuals, and of course the banks, which is our focus today.
Exactly. It's like a domino effect. Businesses struggle, individuals become uncertain about their finances, they pull back on spending and investments, and that directly impacts the banks.
Right, and the source really zooms in on these challenges the banks faced. Increased credit risk was a huge one. Businesses suddenly unable to repay their loans. That puts a ton of strain on a bank's liquidity, right?
Absolutely. When loans aren't being repaid as expected, it throws off the bank's entire cash flow. It impacts their ability to meet their own financial obligations. It's like a delicate balancing act, and this pandemic really threw everything off.
Then you've got this wave of people withdrawing their money. People are worried they need access to cash, so withdrawals go up. But at the same time, deposits are slowing down.
A classic liquidity squeeze.
It is. And the source points out how regulatory measures, while intended to stabilize the system, kind of added another layer of complexity to the whole situation.
Yeah, it's interesting because you'd think regulations would help, right?
Yeah, that's their purpose.
Right, exactly. But sometimes they can have unintended consequences, like take loan forbearance, for example. Regulators allow borrowers to postpone loan payments to help them out.
Makes sense, give them some breathing room.
Exactly. But for the banks, it means they're not getting that expected cash flow. It creates this a double-edged sword situation, helps the borrowers, but puts more pressure on the bank's own liquidity. It's a delicate balance.
Okay, so we've got this pressure cooker situation. What did the banks do? How do they keep this from turning into a full-blown crisis?
Well, according to the source, they got strategic, and they got strategic fast. They focused on 4 key areas, and I think these are going to be pretty insightful.
Okay, I'm all ears. Let's hear it.
So first up, they doubled down on strengthening their liquidity management frameworks. And this isn't just about reacting to the crisis, it's about being prepared for it. Like a financial fire drill.
Oh, I like that analogy. A financial fire drill.
Yeah. You might not know when or where the fire will break out, but having that plan in place, it helps you react quickly and effectively when it does.
Makes sense. So we're talking about stress testing those systems, analyzing different scenarios, anticipating those worst case scenarios, and having a plan of attack ready.
Precisely. It's like a financial war game, preparing for different possibilities, making sure you've got the resources and the strategies to handle, whatever comes your way. And that's especially important when you're dealing with something as unpredictable as a global pandemic.
I can already see how this applies not just to banks, but to anyone who's trying to manage their finances in a world that seems to, throw more curveballs our way these days.
Absolutely. So that was the first strategy. The second one focused on diversifying funding sources.
Okay, that makes sense. Spread the risk, right?
Exactly. Don't put all your eggs in one basket. So instead of relying on just one or two avenues for funding, they looked at a whole range of options. Things like bond issuances, syndicated loans, even partnerships with development finance institutions. They really spread the risk.
That's smart. But hold on, can you break down some of those terms? Like syndicated loans and development finance institutions. I'm sure some of our listeners might not be familiar with those.
Of course. So a syndicated loan is basically when a group of lenders come together to provide a large loan to a borrower, and this spreads the risk among multiple institutions. Now, development finance institutions are organizations, often backed by governments, that provide funding for projects in developing countries. They can be a valuable source of capital, especially during times of crisis.
So the Nigerian banks essentially tapped into a more diverse pool of lenders and investors.
Exactly. They didn't want to be overly reliant on any single source, which is a good lesson for all of us.
Agreed. Okay, so we've got strengthening those frameworks, diversifying funding. What was the third strategy?
This one might surprise you a bit. They actively collaborated with regulators.
Oh, that's interesting. So instead of, viewing them as adversaries, they saw the regulators as allies.
Precisely. They recognized that working together was essential. So they worked very closely with the Central Bank of Nigeria to make sure things were running smoothly and to implement relief measures. It was a true partnership.
Wow, that highlights how important it is to have open lines of communication and a strong relationship with regulatory authorities, especially when things get tough.
It's a good reminder that sometimes the best solutions come from working together, even with those we might traditionally see as being on the other side of the fence.
Okay, that's 3 down. What's the fourth and final strategy?
This one's all about embracing digital transformation. The pandemic really forced everyone's hand when it came to going digital, and the Nigerian banking sector really stepped up. They integrated fintech solutions, expanded online and mobile banking, and made it a lot easier and safer for people to access their money digitally.
And I bet that had some pretty impressive results.
It did. The source highlights how online payment transactions in Nigeria, they shot up by a whopping 50% in 2020.
50%, that's massive. It seems like a crisis can really accelerate trends that are already happening.
Exactly. It's like someone pressed fast forward on the evolution of digital finance. And this isn't just a Nigerian phenomenon, it's happening globally.
So to recap, we've got strengthening those liquidity frameworks, diversifying funding sources, collaborating with regulators, and embracing digital transformation as the 4 key strategies. I'm really curious to hear about the lasting effects of all of this. What were the long-term impacts of these actions?
That's a great question. And it leads us perfectly to the key takeaways from Nigeria's experience. What's really fascinating is that these strategies, they weren't just temporary fixes, like putting a Band-Aid on a problem.
Right.
They actually fundamentally reshaped the Nigerian banking landscape, made it more resilient, more adaptable for the long term.
So the pandemic, as devastating as it was, it also kind of served as a catalyst for positive change, at least in their financial system.
Yeah, I think that's a fair assessment. And the source, it really highlights how those experiences, going through that fire, it led to some valuable lessons.
I bet. And not just for Nigeria, I imagine.
Exactly, for anyone, really, who's grappling with financial volatility in today's world. So let's dive into those lessons, shall we?
Absolutely. Let's break them down. What's the first one that really stands out?
Well, I think the first one is the most fundamental, and it's this. Preparation is key. You just can't wait for a crisis to hit before you start thinking about liquidity management.
Makes sense. It's like having that emergency fund for your personal finances, right? That cushion, it makes all the difference when those unexpected expenses pop up. But how does that translate to a whole banking system? What does preparation actually look like in that context?
Well, it's about having those robust liquidity management frameworks we talked about earlier, but it's even more than that. It's about constantly monitoring and analyzing risk, stress testing those systems, and having, those contingency plans in place for various scenarios. It's about being proactive, not reactive.
So it's an ongoing thing, not just a one-time fix.
Right, exactly. It's like a muscle you got to keep exercising to stay strong. And it applies to, everyone, businesses, individuals, you name it. In this world, having a plan, being ready for those curveballs, that's what can make all the difference.
Okay, taking notes here. Lesson number 2. What is it?
Remember all that talk about diversifying funding sources? Well, that's lesson number 2 in a nutshell. Diversification is essential. Whether it's your own investments or a bank's portfolio, you got to spread that risk.
Don't put all your eggs in one basket.
Right.
Classic advice, but always good to be reminded. Can you give us an example from the source material, though? How did a specific Nigerian bank benefit from doing this during the pandemic?
You're thinking like a true deep diver, asking those specific questions. Well, the source actually highlights Access Bank as a prime example. They had strategically diversified their funding sources before the pandemic even hit.
Smart move.
Right. They tapped into things like international debt markets, development finance institutions. And when the crisis hit, that diversification proved to be a lifesaver. They weren't overly reliant on any single source of funding, so they weathered that storm more effectively.
So they had a broader safety net.
Exactly. They had hedged their bets, so to speak, and it paid off. It's a valuable lesson for everyone. Don't rely on a single source of anything, really. Spread that risk, and you'll be in a much stronger position.
Okay, 2 down, 2 to go. What's a third key takeaway?
Well, going back to what we discussed about the Nigerian banks collaborating with regulators during the crisis, that's lesson number 3, that collaboration is crucial. Having those open lines of communication, a strong working relationship with those regulatory authorities can make all the difference.
It's like having a direct line to the control tower during turbulence, right? You need that guidance and support to get through.
Such a good analogy. And the source, it highlights how the Central Bank of Nigeria stepped in to provide liquidity support to banks during those tough times. They used a number of mechanisms, including reducing the cash reserve ratio for banks.
The cash reserve ratio. Can you explain what that is for our listeners?
Sure thing. It's basically the percentage of deposits that banks are required to hold in reserve with the central bank. So by lowering that ratio, the central bank freed up more funds for banks to lend out. It is a crucial intervention, really helped prevent a much worse credit crunch.
So it was a real team effort. The banks were struggling, they reached out, the regulators stepped in with measures to help. Really shows how collaboration, rather than, that kind of adversarial relationship, can lead to more effective solutions.
Exactly. Working together, especially during a crisis, that's when it's most important.
All right, we're on a roll. What's that fourth and final lesson learned from Nigeria's experience?
This one's all about embracing digital solutions. The pandemic, it really accelerated that shift toward digital finance, and Nigeria was no exception. They realized that tech wasn't just a nice to have anymore, it was essential.
We talked about that surge in online payment transactions, but can you give us a more concrete example of how a bank benefited from that digital transformation?
Absolutely. The source points to Guarantee Trust Bank, one of Nigeria's leading institutions. They saw a huge increase in the use of their digital platforms during the pandemic. Mobile banking app downloads went through the roof, and the volume of transactions done digitally just surged. And that not only helped them serve customers better during those lockdowns, but it also positioned them really well for a future where, digital finance is becoming the norm.
So they kind of built that digital bridge to reach their customers no matter where they were.
That's a great way to put it. It's not just about the technology itself, it's about improving that customer experience and building resilience in a world that's constantly changing.
Okay, so we've covered those 4 key strategies, the 4 valuable lessons learned. But what about you? What are your personal takeaways from all this?
What really strikes me is how these lessons, they go way beyond just the banking sector. They're applicable to businesses, governments, individuals, anyone managing their finances in this increasingly volatile world. Being prepared, diversified, collaborative, digitally savvy, those are the keys to thriving.
It's like building a resilient mindset, a resilient approach to, everything.
Exactly. Uncertainty is the new normal, and we need to embrace it, see it as an opportunity for growth and innovation.
So true. Nigeria's experience offers valuable insights for all of us. But there's one final question I can't help but ask. How might these lessons apply to other countries, or even our own personal lives, as we face more and more uncertainty?
That is a fantastic question, and it's one that I think each of our listeners should really take some time to think about. We've delved into the specifics of how Nigerian banks handled that really turbulent period. But those core principles of being prepared, diversifying, collaborating, embracing technology, those are things that we can all apply in our own lives.
I love that. It's like we've been given a roadmap for navigating uncertainty, not just in the financial world, but in life in general.
Absolutely. It's not just about getting by, it's about thriving even when things get tough. It's about having that resilient mindset, that adaptability, that willingness to constantly learn and grow.
Okay, so let's get practical for a second. Inspired by Nigeria's experience, what are some concrete actions our listeners can take to build that resilience in their own lives?
Well, let's start with personal finances. We've talked about diversification a lot in the context of banks, but it's equally crucial for individuals. Don't put all your eggs in one basket. Spread those investments, consider multiple income streams if you can, and build up that emergency fund.
It's like building a diversified portfolio for your life. Not just your money, but your skills, knowledge, experiences, all of it.
Exactly. And remember that technology can be a game changer. Just like those Nigerian banks, we can leverage all the tools available to us. Budgeting apps, online investment platforms, even those digital payment systems, they can help us manage our finances more effectively.
It's about simplifying things, reducing stress, and ultimately having more control over our financial well-being.
Right. But resilience goes beyond just personal finances. It's about career adaptability, too.
Especially in today's job market, which is, well, constantly changing.
Exactly. So for those listening who might be feeling a little uncertain about their career path, my advice would be don't just rely on the skills you have now. Actively seek out opportunities to learn new things, upskill, reskill, and stay ahead of the game.
There are so many resources out there these days. Online courses, workshops, industry publications, the options are endless.
Exactly. It's about investing in yourself and making yourself more valuable and adaptable in the long run. And I can't stress this enough. Don't underestimate the power of networking.
So true. Just like those Nigerian banks collaborated with regulators, building a strong professional network can open doors and provide support when you need it most.
It's not about schmoozing. It's about genuine relationships, sharing knowledge, helping each other out, building a community of like-minded people who can support you through those ups and downs.
And finally, let's not forget about mindset. Resilience isn't just about practical skills. It's about having that positive attitude, the willingness to learn from setbacks, and the belief in your ability to adapt and thrive.
It's about seeing challenges as opportunities for growth, understanding that setbacks are going to happen, but it's how we respond that really matters.
Well said. So, as we wrap up this deep dive into liquidity management, Nigerian resilience, and those broader themes of adaptability and preparedness, I want to leave our listeners with one final thought. Don't be afraid to embrace uncertainty. It's part of life, and often it's where we find those truly exciting opportunities.
Beautifully put. By focusing on continuous learning, diversification, and proactive adaptation, we can all navigate those choppy waters, emerge stronger, wiser, and more resilient than ever before.
Couldn't have said it better myself. And on that note, we'll wrap up this episode of The Deep Dive. A huge thank you to everyone for joining us on this journey. We hope you've gained some valuable insights and are feeling inspired to tackle whatever challenges and opportunities come your way. Until next time, keep exploring, keep learning, and keep diving deep.